Hi, thanks for watching today's video. I'm Brian, the Finance Ninja. I don't want to waste your time, so let's get to it. In today's video, we are doing an analysis on AMC stock. I'll do a brief history, their current status, and what I plan to do. Get early access to my videos and trades by joining my Patreon. The link is in the description. AMC has a market cap of $29 billion. Current price, $57 per share. And look at that roller coaster it's been on this year. Let's get the financials and recent history out of the way first. AMC has been a struggling company for many years. Even before the issue, it was actually predicted that AMC was slated for bankruptcy in the near future, even before the issue began. Just look at their income statements. AMC lost nearly $500 million in 2017, eked out a profit in 2018, then a loss in 2019. This was all before the issue. AMD was drowning in debt. AMC debt dwarfed their market cap and kept increasing year after year. Total debt at the end of year 2020, $11.4 billion and increasing. AMC was barely cash flow positive in 2019, but it's been the negative for quite a while. Then in June of 2020, AMC issued a going concern notice. This is a cataclysmic event. Basically, it means that they will run out of cash soon. Bankruptcy is imminent. AMC stock plummets. $718.3 million in cash on hand in mid-2020 during the crisis with zero revenues? AMC expected to run out of cash by the end of summer 2020. This is where AMC did what GameStop didn't. AMC saw an opportunity and did everything they could to survive. AMC issued new debt and stock en masse. In January 2021, for example, AMC issued 164.7 million new shares netting $506 million. Simple division, they sold these shares at $3.07 per share. That is a lot of dilution at a terrible price. In January, AMC had 339 million shares outstanding, so this was a very large dilution. A 48.5% dilution for only $506 million. That's pretty desperate. On top of that, they issued 22 million new shares to convert $100 million in debt into equity. This was at a slightly better price of $4.55 per share. Back when the issue started, AMC had 104.32 million shares outstanding. Today, they have 501.78 million outstanding shares. In other words, if you buy a share in AMC today, that single share is worth 20% of what it was in March 2020. On top of that, the share price has spiked. In March 2020, you can grab a share of AMC for $3.16. Today, a single share is worth $57. If you add the dilution into that, then you are paying a much higher price than at any time in AMC's history. Remember, we're in January and AMC just issued a whole bunch of stock at $3.07 per share. As it stands, they are still destined to bankruptcy. They have tons of debt and owe $4.9 billion per year in theater rent with minimal revenues to speak of. AMC is doomed, right? Then a miracle happens. It just so happened that AMC had a ton of stocks sold short. So some wise people in Wall Street bets took notice of this, the slightly improving trajectory of the company, and realized they could capitalize. It becomes the war against the hedge funds. The idea is this. There is so much stock sold short that even a small increase in the price will force the hedge funds to cover their positions, causing a short squeeze. So individual investors piled into the stock. The stock price jumped. The shorts got squeezed. The price jumped more. It became self-fulfilling. AMC went parabolic. In fact, as of this screenshot, AMC is now around $57 per share. You might be thinking, so the share price is higher. That doesn't change the trajectory. AMC is still doomed, right? This is why it matters. With a $25 billion market cap, AMC only has to issue 22% more shares to raise enough cash to pay off its entire debt balance. This company has the potential to do a soft reset and start afresh. It would no longer have to pay $151.5 million per quarter in interest. That is over $600 million per year in savings. This is massive. So let's look at 2017, 2018, and 2019 again. Add the interest expense onto the net income, and what do you get? 2017, slight loss. 2018, nice profit. 2019, profit. I've never seen this before. I've never seen retail investors save a company from imminent bankruptcy. Congrats to the Wall Street Bets crowd and to the retail investors. As of right now, AMC looks like it just may pull this one off. The impossible just may become possible. Because of you. So, what is next for AMC? Aside from the short squeeze, there was a decent bull argument to be made for AMC. When the issue swept the world, Hollywood put every movie on hold. There were 0 new theatrical releases for a very long time. So Hollywood has a huge backlog to get through. On top of that, they have an in-development backlog of movies to finish filming, post-processing, etc., and new movies getting greenlit right now. So big new releases are going to start getting dropped one right after the other, some just a week or two apart. This will last until 2022. The slate of movies over the coming year and a half has never happened before. We have never had this huge number of hits releasing over a 12 to 24 month span. With the backlog and no interest, there is a reason to be excited about AMC. On top of that, people are tired of staying at home. They want to get out. They want to explore the world. They want to get the movie theater experience. This is a huge tailwind for AMC and all theater chains. I expect AMC to exceed their 2019 revenues even with the slightly fewer theater count. So what will I do? Let's crunch some numbers. Assuming that AMC gets back to 2018 numbers, remove the interest expense, and you get $550 million in net income. Now let's assume that AMC issues the 22% dilution to pay off their debt. That gives us a share count of 622.2 million, an EPS of 82 cents, current share price of $57 per share. That gives us a forward PE of 69.5. That's a little high, and everything has to go right. Remember, this stock is still very risky and very speculative, so a PE of 69.5 is a little high for me. So right now, for me, AMC is a pass. I'll put it on my watch list. If the price drops to the low 20s or into the teens, then I will reevaluate. There is now new competition from day-and-date releases that AMD has never had to deal with before. In the very long term, AMC's competition will not be other theater chains, but the likes of Netflix, Disney Plus, etc., basically streaming networks. So while there's some tailwinds, there are some headwinds as well. Don't forget to smash that like button and subscribe. Get early access to all my videos and trades as they happen by joining my Patreon. The link is in the description. Thank you for watching, and I'll see you in the next one.